Hi, I'm Jimmy. In this video, I'm going to walk through a quick analysis of Lockheed Martin's stock, ticker symbol LMT. Lockheed Martin is an aerospace and defense company, and it pays a pretty good dividend. Now, I actually got quite a few videos asking for an analysis of Lockheed Martin, and given the question marks surrounding how long the stock market can keep running, well, I thought it made a lot of sense to do an analysis of Lockheed Martin, which could be a great defensive stock to own. Plus, it has the added bonus of consistently paying pretty good dividends. So first, we're going to look at their segments, and then quickly at their financials, and then finally, we're going to try to calculate the fair value of Lockheed Martin's stock using discounted cash flow. Okay, so Lockheed Martin operates in four main segments. They have aeronautics, rotary and mission systems, then they have space, and then their last segment, their smallest segment, is missiles and fire control. Okay, let's start with the largest contributor to revenue, aeronautics. So Lockheed Martin's aeronautics division accounted for about 40% of total revenue in 2018 with a bit over $21 billion in revenue. Now, their primary customers are government agencies, with the US government accounting for about 63% of this segment's total revenue. Now, typically, I'd be concerned if a company's largest segment was dominated by one customer. Typically, they call that customer concentration risk. But in this case, this is the US government, and I think that it's somewhat unlikely that the US government's going to stop funding the military. Now, one of the main products that this division sells to the US government and other government agencies around the world is fighter planes. In fact, right now, and for the past few years, their main fighter plane is the F-35. Now, in the first quarter of 2019, Lockheed Martin delivered 26 F-35 planes to various countries around the world, and that helped push their revenue up by 27% from the same quarter of 2018. This is what revenue looks like for the aeronautics division of LMT, and this chart goes back to 2009. And as we can see, it's been fairly consistent, and expectations are that we'll continue to move higher in the coming years. In fact, the Pentagon has come out and said that one of their top priorities is to replace many of the aging fighter jets in the US Air Force, and that seems like a pretty good thing for LMT stock, especially with their F-35 series. Okay, now back to the pie chart. Now, the next largest segment is their Rotary and Mission Systems division. Now, this segment accounted for about 26% of revenue, with about $14 billion in revenue during 2018. Now, the US government made up about 71% of that revenue. So once again, customer concentration risk, but at this point, I'm not too concerned. This division designs, manufactures, and services a handful of military and commercial helicopters. They have ship and submarine mission and combat systems, sea and land missile defenses, and then they have some radar systems and some simulation and training programs, things along those lines. Now, this is their revenue going back to 2011, and as we can see, it seems to be heading in the right direction. Now, this division is also off to a pretty good start in 2019 with a jump of about 17% in revenue compared to the first quarter of 2018. So good start for 2019 for the first two divisions. Now, this segment's revenue was driven mostly by improved sales in their radar systems and their combat rescue helicopters, and then a few others. Okay, now back to the pie chart. Okay, the next division is space. So the Lockheed Martin space division accounted for about 18% of revenue in 2018. And in this division, the US government accounted for about 84% of revenue. So there's that issue again, but either way. What this segment does is they design and build satellites, spaceships, advanced strike systems, defensive systems, things along those lines. I also know that they're working with SpaceX in what they're doing. They're working with the United Kingdom on a nuclear deterrent program. They're also working with NASA, and I know that they're modernizing the US Air Force's GPS systems. So they're doing a lot of things in that type of area. This is the revenue for LMT's space division, and as we can see, it's climbing along at a decent pace. It's not growing quite as fast as some of the other segments are. In the first quarter of this year, it put up about 13% growth, so decent, but not as good as the first two segments. Now, LMT said that this growth for this segment was mostly from high government sales in their satellite programs. Okay, now we jump over to LMT's smallest divisions, missiles and fire control. Now, this segment pulled in about 16% of LMT's total revenue in 2018. This segment makes air and missile defense systems. They do air-to-ground precision strike weapon systems, tactical missiles, manned and unmanned vehicles, fire control systems, and the list goes on and on. Now, this segment had the best performance to kick off Q1 with a 40% jump in revenue when compared to the first quarter of 2018. LMT said that that growth came mostly from increased sales in their new hypersonic missiles program and their precision fire program. So this is what the historical revenue for this segment looks like. Okay, not bad. So overall, we've seen that each of the segments have shown pretty good signs of historical growth, and they've shown pretty good growth in early 2019. So this is a chart of total company revenue. And as we can see, this chart goes all the way back to 2002. And what strikes me about this is two main things. First, we had a dip in 2015, although I'm not too concerned about that, and I'll get to why in a second. But the reason I go back all the way to 2002 with this chart is because this is the Great Recession. And what strikes me about that is that LMT's revenue seems to be unfazed by what was happening with the general economy at the time. Now, that's not to say that Lockheed stock wasn't down during this time period. It was. This is a chart of Lockheed Martin's stock from the end of 2007 to the end of 2009. And as we can see, LMT was down about 25% during this time period. But since the end of 2009, LMT stock was up about 550% compared to the S&P 500, which was up about 171%. So clearly, they have significantly outperformed since this time period. So it seems that one of the reasons for the enormous difference in the total return numbers, by the way, all the numbers that I just mentioned were total return numbers, which assumes that we reinvested all the dividends of both LMT stock and the S&P 500 back into those, that we came up with those returns. Either way, one of the reasons that LMT would have such significant performance compared to the stock market was the fact that their revenue wasn't hurt too bad during that time period. Neither was their earnings per share ever since that same time period. Well, this makes LMT stock a prime candidate as a defensive stock, and LMT stock also has the advantage of being a good dividend payer with a dividend yield of a bit shy of 2.5%. So the question is, what is LMT stock worth today? And does it make sense to add LMT stock to any of our portfolios at its current price? So this is a discounted cash flow fair value calculation for LMT stock. And if you're wondering how to calculate this, I've actually done more in-depth videos on this very topic. You can find a link in the description below to those videos. But basically what I did is I took analyst expectations for free cash flow, and then we discounted those by our weighted average cost of capital. For that, we used 7.5%. We used a perpetual growth rate of 2.5%, and then that gave us a fair value of about $408 per share. That's not too bad when we consider that Lockheed Martin's current stock price is about $360 per share. So despite all the growth that LMT has shown, it looks like there still may be a bit of upside. So now we can look at some comparables. LMT stock currently has a PE ratio of about 18x, while the S&P is sitting at about 19x. So that looks like a pretty good thing for LMT stock. But if we were to compare LMT to a company like Northrop Grumman, well, NOC is trading at about 14x. So LMT's 18x looks pretty expensive compared to Northrop's 14x. Now, another competitor is Raytheon. Raytheon's actually trading at about 17x. So out of those three, NOC could actually be a better buy. So if that's something you're interested in if we're curious to see more about that, let me know in the comments below. I could do some research on that and try to make a video on NOC. But overall, I'm actually a big fan of Lockheed Martin stock. I actually like where it's trading. I think it's trading at a fairly reasonable price. They seem to have a decent amount of growth ahead of them. And any worries about the stock market, I think that this is an opportunity to get fairly defensive. And I think it could be a good addition to most portfolios from the defensive standpoint. But what do you think? Do you like Lockheed Martin stock? Do you think that it's a good buy at this current level? Or perhaps we should wait for a dip in the stock market? Or do we want to go ahead and research NOC before we make any final decisions on Lockheed Martin? Let me know what you think in the comments below. If you haven't done so yet, please hit the subscribe button, hit the thumbs up. Thank you so much for sticking with me all the way to the end of the video. I'll see you in the next video. Thanks.